foreclosure or a trustee sale?
Well, what it is, the borrower who has title to the property will go to the lender and offer to give the property back to the holder of the note by deed. So the idea is, rather than foreclosing or rather than a short sale, the borrower just says, I'll just give you the property back by deed, and then you'll own the property and you won't have to foreclose on me. The reason that that's more appealing to the borrowers is because they don't go through foreclosure. It still shows up on a credit report because it's a non-conforming resolution of that debt, but it's better than foreclosure. It's better than bankruptcy. And so it's cleaner, faster. It has some problems, though, because it doesn't, the lender, or the borrower, I mean, isn't really qualified under any statutory protections when they do that. So you would have to make sure that when you give the property back to the holder of the note, that they're not going to pursue you for any deficiency. And you know, if there's multiple mortgages, you have to deal with all of them. You can't just deal with one. So it has some pitfalls. You'd have to be careful trying to do it. And it actually, it's done, but it's not done all that much because it's hard to work through all of that and get them to take the property. And especially when people usually have, over time, refinanced their properties and multiple mortgages exist, and it gets to be complicated to do that.
I think I used to see more of them at one time, and then now, just with so many people that are in a position that their properties are worth less than their mortgages, that it just doesn't seem to be very widely done.
Well, I think that's part of the reason. The lenders are much more willing to take the property back if it has equity in it, or if at least it's a break-even, rather than foreclose on it. They can take it back and sell it. But when the properties are underwater, then the lender isn't going to get back the full amount of the loan anyway, and so you have to go through all those issues with the lender.
Yeah. Okay. Now, what happens when you walk away from a home that has a mortgage?
Well, the idea of walking away, and people sometimes do, you just leave the house and walk away, leave it vacant. It's going to be foreclosed, probably through, if it's a residence, probably through a trustee's sale. The consequences will depend on the kind of financing that you have. We'll talk more about that later, but there's recourse financing, non-recourse financing, purchase money, refinance money. So just walking away will have consequences. It'll have an effect on your credit. It'll have an effect on your income tax result. And you have to be careful also based on the kind of property that you're walking away from. For example, condominiums have homeowners associations, and they have homeowner dues. And a lot of people don't realize that those dues can also result in a lien on your property and the right of the homeowners association to foreclose on the unpaid dues. And so you can end up losing the property that way and not resolve your mortgage issues with your lenders. So the kind of property matters too. I would be more careful walking away from something like a homeowners association or a street association or something where there's other dues and fees that are paid.
Okay. What's a short sale? Is it a better alternative than a foreclosure?
Short sale is when you offer your property for sale and it's going to sell for less than the amount of the debt that's owed on it. So the process basically is to put your property for sale on the market, and usually what is required is that you actually have an offer from a prospective buyer, and you would then take that offer to your lender or lenders and try to get them to agree to let you close the sale for the amount of the reduced purchase price. And then the process is very complicated because if you have one lender, you have to get them to agree to let you close the sale, but also you have to negotiate what's going to happen about the difference between the sales price and the mortgage. If there's multiple mortgages, you have to deal with all of those, and if one of the mortgages is not going to get anything because of the reduced price, that gets to be hard and complicated. Is it better than a foreclosure? It has benefits. I think the benefits are you're in control of the process more because you have a sale that's working. So you have more control of the price that the property sells for because you're the one who found the buyer. the timing of things. You're in control of that. With foreclosures, they can go on for months and months and months, and nothing's happening. And you don't really feel like you have any control over that. So you have more feeling of control with a short sale. And it can be, and I think this is the primary reason people think they're better, it can be better in terms of your credit because it's not a foreclosure. But still, it's a negative effect on your credit rating, just like a deed in lieu foreclosure would be as a non-standard
settlement or whatever.
Settlement, yeah.
And I guess the reason they call it short is you're selling the house short of the amount that you owe on the place.
Right.
Okay. So let's see here. So I guess one of the issues related to this is whether the lender, in fact, is going to agree for the debt to be canceled.
Right.
And we can maybe we'll get into the different types of recourse and non-recourse in a moment. But and this is an issue. Is some people, they can go through these types of transactions and they may find that the lender can come back and try to collect from them at a later time.
Right. There's a lot of difficulty in these transactions. They are probably the most common solution that people are trying to use, partly because they like the fact that they feel like they would have more control and because it's better for their credit. But in reality, dealing with the lenders can be difficult, and this is where people really need to have advisors. And here we talked before about the problem with loan modifications. Well, in this area also there are problems with people who are called negotiators, who aren't licensed people either, who will advertise that they will help you get a loan or a short sale through your lender. And you need the public needs to be very concerned about that because there are people out there who are committing fraud. So they need to only use licensed people, licensed real estate people, accountants and attorneys, people to advise them, who have licenses, who have something to risk, as opposed to having people who don't and paying them money to maybe not help them very much. So,
well, I think another part of this, though, is that it's the real estate agents and brokers. I mean, this is a big part of their business right now. I mean, there's not that much to sell outside of the short sale context.
Anytime that there's money being made, and like you say, that right now this is one of the main ways that people make money in real estate. It's, I think, something like a third of all real estate transactions now are short sales. Then there's going to be an impetus to try to get people through them. But I'm also hearing from realtors that they're very frustrated with that process as well, because the lenders are going slow. They're not always cooperating. There's a lot of back and forth. So I talked to a realtor who told me he opened one of these in February and he still hasn't been able to close it. The buyers lose interest because, they were going to buy a property 6 months ago. They can't close it, so they're losing interest and wanting to leave. And then, again, in the background, the foreclosure process is running because the short sale also probably meant the person didn't make some payments. And so that foreclosure process means that there's a deadline coming, the trustee sale.
Right.
And so oftentimes in the short sale, the homeowner will get a notice that their trustee sale is about to happen, and they're trying to close the short sale. So you have to go to the lender then and try to get an extension. So again, this is frustrating for people because it's taking so long, and it doesn't always resolve short of foreclosure.
Yeah. So even the real estate people, I mean, it's so tough for them because there's so little other types of transactions to do. But they have to work really hard for this money for getting a little.
Right.
And
they have to work harder, and then even the lenders try to get them to reduce their commissions as part of the deal because they're always trying to get extra money.
Yeah. Now, isn't there also a possible difference related to statute of limitations related to these types of deals?
Right.
In particular, I guess there could be rules outside of California, even that you and I may not even know about. But
well,